Now, guys, last month, American pro golfer Taylor Gooch scored big on the Live Tour, or did he? He won $6 million at a tournament in Australia, but guess what? The Australian government took almost half of his check in taxes. Not to mention, on top of that, he's also got to pay U.S. taxes. Whether it is a significant windfall or not, let's talk more about this. How do you develop a tax-efficient retirement plan that maximizes income and minimizes someone's tax liability?
Yeah, so ouch. I mean, if he lost almost half of it over there in overseas taxes and then, possibly another 39% here, there's like a big chunk of that that's gone away for his winnings. And it's what we call the retirement blow up. In fact, the retirement blow up can really happen for folks when they're looking at leaving money onto their loved ones, their children. So, when we think about it, and we're looking at developing a plan. A lot of people want to have us help them create a tax-efficient plan to maximize income. Really, at the end of the day, all roads lead to income. And so when you're looking at developing this tax-efficient retirement plan that maximizes income and minimizes tax liability, we talked briefly about it just in the previous segment. And of course, if you missed it, all of our segments are available on all the podcasts and Spotify, Apple Store, or even on YouTube if you just type in America's Retirement Headquarters. But what we had talked about is we talked about a 401k. Contributions into a 401k, you can maximize some of your income because a lot of the plans will offer some type of company match. But also to make it tax efficient, you might want to consider what is called the Roth 401k option. And that's where you pay the taxes now, but it may be better off to just address the tax issue today and pay the taxes today so you can build some tax-free wealth for you and your family in the future. For those of you that maybe don't have a company match or don't have a 401k, maybe you're self-employed, you can look at making contributions to a Roth IRA. Now, Scott, I know he's not here today, but speaking for him, one of the things that he talked about when looking at tax efficiency and maximizing income is opening a health savings account. And he'd also talk about leveraging your assets to protect you from getting wiped out from a long-term care standpoint. If you're self-employed like we are, I know a lot of times I get together with my accountant and we're always looking at what are the other things that I should be aware of as a self-employed individual and things that I can deduct. Looking at things like cash value life insurance. I know it's a boring topic, but cash value life insurance can still be a vehicle that can build retirement income. It can be income that could not be subject to market risk. It can be a way to protect your family in the event of a premature death or protect your spouse in retirement time if you end up passing away early. So when you think about, the government coming after your money, again, creating a tax-efficient plan to maximize income, one of the most important things I would say, Chaz, is to try to figure out how to keep the government away from your money and how to generate as much predictable, reliable income in retirement time as possible.
Yeah, I agree. So that's the key. I mean, you just got the key right there is how do you keep more of what you make? I think that's basically what most everybody is wondering, and that's really where the skill lies. That's where the real talent is. It's because when you look at taxes, Nolan, I think one of the big issues is that we pay tax in big chunks, whereas in investment management, if we have a good year in the market where we beat the market by 2 or 3%, we can wipe all of that out in one, not us personally, but investors, the community in general, can wipe out a good 5 or 10 years worth of growth just in one bad year of tax planning. Mm-hmm. You're going to pay 20%. Well, I made 2%. It took me 5 years to get that 10 years. So you pay. That's one thing to keep in mind is you pay taxes in chunks. It's going to be for that reason the biggest expense that you have. And so the real acumen and the talent and the skill lies in helping you keep more of what you make. Now, when we're looking at, okay, so how do we do that, Chaz? Well, Nolan brought up a great option, the Roth IRA. And if you have the ability to contribute at this point, that's awesome. But if you don't have earned income, you may not be able to contribute to your Roths other than doing what's called conversions or converting your traditional IRA to Roth. And we actually break that down into two strategies or two concepts. We call it strategic, where the long-term goal is that you eventually be 100% tax-free by age 73, let's say, for instance. Now, how do we get there is more tactical, meaning on an annual basis, if we want to convert more or less in some years because, say, for instance, last year the market's down 20%, great time to do some conversions because you're going to pay tax on assets that have depreciated in value. They're down 20%, so you pay 20% less in taxes. Another big strategy for helping you keep more of what you earn is Social Security timing. And, just looking at the strategy of when to take Social Security, I think that's probably one of the bigger aspects of good income planning. Also, charitable contributions, QCDs, what we call qualified charitable distributions, where when it's your time to start taking money out of your accounts instead of out of your IRA accounts or 401ks, instead of taking that money from your cash or checking account, maybe have us authorize those deductions or those contributions to your church or charity go directly from your IRA. And then that way you can avoid having to pay any income tax. So in addition to that, tax loss harvesting, there's just so proper beneficiary management. There's just so many different aspects. It's almost become it's a renaissance of tax planning. I don't know if you've noticed this, Nolan, but almost in every single conversation we have with clients recently, there's some measure of tax that they're interested in. And I think it's just because so many people are starting to retire at the rate of about 10,000 per day that previously our clients were focused more on accumulating wealth and getting to this point. And having been in the business 20 years now, we're seeing the fruits of their labor where they can now retire, and it's a different conversation. How do I get this stuff out of these accounts without getting crushed by Uncle Sam? And so that's really where we've been seeing, these strategies, a lot of these complex, programs that you can take advantage of to help you keep more of what you want. And that's really where I think our expertise lies, because we have the time, the tools, the talent, and the resources to do it for you efficiently and help you do just that.
Now, Chris, I know I love talking on the topic of creating a tax-efficient plan to maximize income, but I know we're coming up here at the end of our show. How much time do we have left?
Just a couple minutes, maybe 2 or 3 minutes.
Perfect. So when you're looking at creating a tax-efficient plan, it is one of the topics that we're going to be talking about at our retirement playbook. So Chaz and I will be putting on a presentation again here in Perrysburg, Ohio. It's at the Bowling Green State University Levis Commons campus. Next week, this is one of the topics. And taxes is such a crucial topic because, as you point out, Chaz, people have built their retirement accounts to be their biggest or second biggest asset. They spend all of this time saying, hey, when you retire, tax rates will be lower than they are today. But it's so important because now those tax rates are coming due when they're taking that money out, and they're trying to figure out how do you keep the money away from them. So it's a matter of like what we were talking about in the beginning part of the show of how to get prepared for stagflation or get prepared for a market decline. But, what a shame it would be to help somebody out making smart financial decisions with what they own, but then to turn around and only end up paying more than what, quote, is their fair share when it comes to taxes. So creating that tax efficiency is important. And for those of you that are out there that are listening, you probably just finished up your taxes, right? So I can almost guarantee a lion's share of you now put those taxes in a box or put them in a file cabinet. You've closed that door and you've checked off the box. But while it's still fresh in your mind, now is the time to take a look at 2023 and say, what can we do to keep the government away from our money? And our office, we can run a 2023 tax roadmap for you. In fact, for the first 5 callers that call in, we'll run that tax roadmap. Just that one idea, Chaz, that you gave out, which is the strategic and tactical Roth conversions, can be a great way for those of you who suffered declines in the market last year but believe in your investments in the long term that they'll come back. Can be a great opportunity to get those conversions done, move that money from your tax-deferred category over into the tax-free category. Do it both within your strategic bracket as well as within the tactical standpoint, looking at what are the opportunities that you or I and we believe have the greatest potential for growth, and putting that in the portfolio can be an excellent strategy. So to learn more about that, reach out to our office for that offer or come out to the event next week. We'd be happy to share that information with you.
And it's real easy to get in touch with. Give a call, 419-794-3030, or find out how to register for the event by going and clicking on the events tab at arhq.com. So many of us are focused, year in, year out on how to save money on the taxes that we have to pay for the previous year. Let's start focusing on the taxes that we will pay or can hopefully minimize what we have to pay for the 20, 30 years ahead of us in retirement. It all starts with a plan, setting up a time to speak with America's Retirement Headquarters, 419-794-3030 or arhq.com. And once again, want to thank you so much for joining us here on America's Retirement Headquarters. I really do appreciate the time. Nolan and Chaz, appreciate the time as always. Thank you so much. And as we wrap up, want to leave you with the final word.
Well, we talked about Warren Buffett a lot today, so we'll finish on another Warren Buffett quote, and it's, "Only when the tide goes out do you discover who's swimming naked." So have a great week, folks. We look forward to seeing you back here, same time, same channel on Toledo's largest talk station, 1370 WSPD. And just remember, when you think retirement, think America's Retirement Headquarters, home of the Retirement Guys formula and America's Medicare Associates.